Hi traders, welcome to this week ahead analysis video with me, John, Senior Market Analyst here at Blueberry Markets. Let's jump straight in then. Let's go take a look at the data this week and some charts of interest. I've actually added an extra chart this week, so make sure you stick around for that because I think it's going to be a really important one and we'll go over that a little bit later. But lots of data coming out this week, especially for the US. We've got the non-farm payrolls as usual, expecting to see a little bit of a decline here from 303 to 243k jobs, and anything over 200k is still considered really good growth. So the Fed will obviously want to see this start to come back down. Now, what the market I think is kind of risk or kind of allocating right now is risk to the upside in rates rather than risk to the downside in rates now. So we were obviously talking about cuts before, but the labour market has been really resilient. And I think if it remains to be resilient, then there's going to be pressures on inflation going forward, and there could be pressure on the Fed to leave rates higher for longer, which I think is expected now. But what if there is a chance of a rate hike? That is going to be really interesting. Obviously, the bigger mover for the week is going to be the Fed funds rate decision. You can see expected to hold interest rates at 5.5%. Don't see any change from there. FOMC press conference is going to be very pivotal this week. You know, what is Federal Reserve Chairman Powell going to say? Is he going to be discussing the idea of leaving rates higher for longer, or does he even talk language in terms of hiking rates if they need to? That is what I think the market is going to be really waiting for going into this week. So another tricky week ahead in terms of data, especially for the US. Going on to the strength meter, then we have started to see a little bit of a decline in that US dollar. I don't think that's anything shocking to us at the minute. Obviously, the market had a really decent rally and it's just consolidated for the past couple of weeks. So I'm not really expecting this to be the full reversal that I'm looking for the dollar just yet. I still think 107s are in sight. Talking about the US dollar then, so the US dollar index here, we can see that 107 level, these previous swing highs back in October and November of last year, really in sight now. You know, we're looking at the daily chart. The market is making higher highs and higher lows, and we're just waiting to see if this now is going to be the impulse leg for a primary phase here for the market to continue this upward trend into those 107 highs. That's what I'm looking for going into this trading week. Going across the board then, so euro US dollar, obviously the opposite to that. We can see consolidated last week really, or for the past couple of weeks, and the market coming retested those key swing lows now. So is this the area where we see a push back down towards that 1.06, or even a move down to 1.05? Looking at the 4-hour chart, in order for us to be bearish really, we need to see the market fail to make new highs and maybe produce some new lows. So I can see obviously the market in that secondary phase on this daily chart is making higher highs and higher lows. What I'll need to see really is for price to either come back up, fail again at these highs, create a lower high, or breach these swing lows here on the 4-hour time frame, close below. That could really invite some further selling pressure there on euro US dollar. A little bit different cable has obviously been a little bit more stronger than euro US dollar on its pullback. We came into the sort of the 123 handle, had a very sharp rejection back to the upside, and we're now trading around 1.2520. So nice trend line resistance here. We can see we formed here, anchored off that high on the daily chart, and then that projected through is producing a third test here, which we can see here on the 4-hour time frame on the right hand side. So closed around 125. Got that 125.20 resistance. I think if you want to be bullish cable, you need to wait for breaks above that trend line resistance, above this consolidation around about 1.2580. If you want to be bearish, you want to be looking below 1.2460s, these recent 4-hour swing lows, for confirmed potential selling opportunities. Going on to dollar CAD then, so we've got one more after this that I've been holding on to because I think it's a very important chart, but we're going to talk about dollar CAD first. Dollar CAD, I like the idea of being a buyer of dollar CAD at the moment, especially fundamentally, and we breached this 136 handle. We had a very sharp, aggressive move away from here, so it made sense that price was potentially going to come and retest 136. We did talk about recently this consolidation, but price didn't really hold here. We failed really, and price kind of breached back below. But very similar again, I don't want to be long unless I get some serious price action that tells me that buyers are back involved in the market. I can see here we're making those lower lows and lower highs. So what is the point of being a buyer just yet? There isn't one. So we could continue down to 136, where we could see a change of trend here on the 4-hour time frame, or we could see a breach of this trend line resistance, breach of these recent 4-hour highs. That would confirm to me that there could be an opportunity to trade back up towards the recent daily swing high and that 139 handle. So the final chart is going to be dollar yen. You know, we've talked about this so often the past few weeks, and we've been bigging up that 160 level, that 158 to 160. We closed trading at 158.28, so a very big impulse going into the end of last week into these major swing levels. So is this the big intervention level around 160? I really like the idea of price hitting 160 and rebounding, because these are the highs back in 1990. So we haven't seen these highs for a very, very long time, and it could be an interesting idea for price to come into that level and reject sharply away. But it'd be very interesting to see if that does happen or not, because the Bank of Japan have been very sort of coy on whether they're going to intervene in the markets or not. So keep an eye on that one. And if you've been watching the video to the end, I really appreciate that. And if you want to leave a comment down below, what do you think a good level to watch is on dollar yen? And I will catch you in the next video. Cheers.